Today I spoke with Wim Schreinemarkers, who's an algo trader with 25 years trading experience. He joined DarwinX just over 4.5 years ago, and his track record has been consistently good since then. His main strategies are based on breakouts, but Wim uses a couple of interesting techniques that he says improve the performance compared to a basic breakout strategy. Firstly, and surprisingly, he doesn't wait for the price to break beyond support and resistance, and instead prefers to enter his positions earlier and take advantage of a characteristic of price action where he says price tends to be sucked towards the support resistance level. He says this then allows him to get his stop loss to break even much quicker. And secondly, we've all heard of a trailing stop loss, but Wim also uses a trailing take profit. And he explains why this gives his trading an additional edge. With these techniques and many more, I think this is going to be one of those interviews that gives traders some really great ideas to backtest themselves. I hope you enjoy. So it's really great today to be able to speak with Wim Schreinemarkers from Belgium, who is the trader behind Darwin GKE. Hi Wim, how's it going? And I apologize for my pronunciation of your surname there.
It's good. I could recognize myself, so it's okay.
Good. Okay. So thank you for joining me today. It's really great to be able to speak to another trader on the DarwinX platform. And I can see from your Darwin's page that you have over 4.5 years track record. And apart from a small drawdown in 2023, you've produced really great, consistent results. So I'm really excited to find out more about the strategies and the techniques that you use. But before we do that, maybe you could share a little about how you came to be a trader and also where your trading journey has taken you since then.
All right, sure. It's a bit of a long story, maybe. When I was young already, I had this urge that I didn't want to do the 9-to-5 job kind of thing. I started out with that, but I was always in my mind, I have to find something that can give me an income without having to be an employee or anything. So basically I started with Googling how to make money online. And that way I got some of the Google results for Forex trading, of future trading, I think, in the beginning when I started out. So I clicked on, I opened an account, I started to do some trading manually on the future markets in the beginning, quickly moved to Forex markets. Okay. After not so much time, I decided, or I found out that automated trading also exists. And I had a background in IT, so I knew how to program. I started with automated trading, not on the MetaTrader platform, because it was not so well known at the time. I'm speaking about 25 years ago now.
Okay, wow.
I don't remember, I think Trade Desk or something, what the original, the other software program was called. Okay. Anyway, started with that, wrote some algorithms, did some backtesting, no live trading yet. But I noticed that the backtest quality the live results were completely different than the backtest. So the software package was not so great.
Just interestingly, Wim, obviously I had a similar journey to you where I started out sort of, trying to trade the markets manually and then eventually moved over to an algorithmic style, an automated style. I'm just interested, how long did it take you to sort of have that realization that was going to be a style that was more suited to you? Because it took me far too long. I think I was probably, trying to play with the markets for maybe two years before I eventually decided to move over to become an algorithmic trader. Was it quicker for you?
Yeah, it was a little bit quicker. I think like half a year, maximum 1 year.
Right.
And okay. The main reason was I didn't want to sit behind the laptop watching charts all day because the emotions when manual trading. So all day long, especially when you start out, the emotions go up and down and up and down and up and down. You're not making money. So you're basically just feeling bad most of the time. So I thought if I can just automate a strategy that works, I only have to, basically, in my mind, it was you press play and it will grow your account into oblivion, basically into Afterwards, you realize it's not as easy as it sounds. But so I think after half a year, I already started programming algorithms. I had no idea my initial algorithms, what type of style they were. But it was on a different platform than what I do now, MetaTrader. I made the switch to MetaTrader, I think, because I found the website MQL5, where I saw a lot of programs being sold. Anyway, I saw this was a bigger market, so I started to upgrade my knowledge into the language of MetaTrader 4. MetaTrader 5 didn't exist yet.
Yeah.
Writing some algorithms, and then after a lot of failure, basically, I had a dream, and this might sound a bit corny, but I woke up in the middle of the night. I had a dream about a type of strategy.
Okay.
It was a volatility breakout system. Now I realize, so afterwards I realized, but at the moment I didn't really know. I just thought that if price moves fast in one direction, try to follow that momentum, basically.
Okay.
So I woke up in the night, I wrote down this idea on the paper. The next day I started with the programming, and that was my first real algorithm that had a lot of promise.
Okay.
I started programming, working on that. I didn't have a lot of balance, didn't have a lot of to go with, to trade on. So one of the ideas that popped in my mind was, because I saw some other websites selling their algorithms as well, I thought maybe I just try selling the algorithm in the beginning, just to earn some extra cash to be able to trade with.
Okay.
So I made my own very basic website. It did a bit of sales, nothing huge, but it showed me there was promise in selling EAs.
Yep.
And then the MQL5 market started to grow as well. So I started promoting my products on MQL5, and since then, basically, that's become my main business. So I've been doing that for at least 15 years. I've released over 20 EAs on that platform.
Wow. Okay.
And it basically changed my life, going into this direction of creating programs and offering them for sale as well. I've been on the #1 spot on MQL5 numerous times as well. I got an MQL5 reward as well for being one of their best sellers, basically. That's a bit the story how I got into trading. I also did on the way. It's maybe also interesting to know. I didn't just do the sales, because I met some people as well on the way when I developed my systems that wanted to use my systems for their accounts. So basically, I was managing the algorithms on bigger trade accounts for an investment fund, basically. So already 10 years ago, there was like over 1 million funds that I was running the EAs on. So I have this kind of experience with bigger funds quite early as well. It didn't go so well as the system that I was using then didn't have the quality that I made recently, but it was a good school for me as well.
So you mentioned there, Wim, that you have around about 20 products on the MQL5 marketplace. Are they all strategies that you trade yourself currently?
Currently not, because when you develop strategies, and especially when you're learning still how to develop strategies, some of them work, some of them don't. Some of them work for a certain period of time. It's very hard to predict how long a strategy will actually be successful or not. So I had some strategies, for example, that did very well for like almost 2 years, and they made, it's aggressive setup, but it was like 200% without using any risky grid or martingale system. So it was also price action trading. Okay. And then it slowly started to turn around. So if you would look at the growth curve, it was almost straight up and then slowly starting to bend and then slowly going down. And then you try to improve and try to see if you can fix it. But I for some of the strategies, I didn't find an answer. So from the older ones, there are some part that you still use. For strategies that I usually mostly use are like breakout strategies. And parts from what I programmed 20 years ago, I still use, because some parts are really good and some parts you change. But I used everything that I programmed because when I made them, I was convinced that they were very good strategies. Else I wouldn't, finish them and use them and sell them. So
Right. Okay. All right. Well, now is maybe a good time then. You've mentioned that predominantly you're a breakout trader. So maybe we could turn our attention to that in a little bit more detail. And I believe you've got something you can share with us on the screen as you're going to talk us through sort of your approach to that breakout trading strategy.
All right. Let me share my screen here. So one of the main strategies that I use is indeed a breakout strategy. Now, there are different types of breakout strategies. One of them is a volatility breakout strategy. As I mentioned, my first dream EA, the one that came in a dream, was volatility breakout, which basically means if price moves fast, like this candle here, it's a big jump upwards. And the idea is that price will move forward in that direction afterwards. I don't use this kind of strategy at the moment. The ones that I do use is the breakout of support and resistance levels, which is actually a very old strategy. It's been used by many traders, I think, because it's effective on many markets. And to make a very simple example of that, let's say we are here at this point. We are here.
Okay.
So the support and resistance levels are obviously above and below that price. So for this one, it would be here, the resistance level, and the support level would be down here. So these are the recent support and resistance levels. It's not like a straight line because I like to use zones to enter. So not just at the high or the low of the support and resistance level, but more like spread out entries around the zone. So what will happen is if price moves up from here, it will trigger, the system will put pending orders at the resistance level, but it will put multiple pending orders. Each one will have like a different exit strategy, a bit more different stop loss management, take profit management. But I spread a bit the risk by putting multiple pending orders at this resistance level. When price moves up, it will trigger these entries, these buy stops. Then price can do two things. It can go up or it can go down. That's
interesting, Wim. So you're actually placing your pending orders at the level there, not above the level. So you're not actually waiting for price to properly break out above the level. You're executing your trades at that level, are you?
Yeah, I used to do above and below because logically you would think we have to wait until the price breaks that level. But last year I found by doing optimization and testing that when price comes near the level, it usually gets sucked in by the movement. It always wants to touch the high basically, and not always, but there's a big probability that it's getting sucked into the high of this resistance level. So if you enter a little bit early, you can already have a good stop loss management before it breaks.
Right, okay.
So you can already, basically, I very simply put, it's not as simple as it sounds now, but you can already move your stop loss to break even before it breaks or before a reversal, before the fake out of that level.
Right, that's it. That's interesting. Okay.
Yeah, because what happens often, you can see it here, it breaks this level at this point, but then reverses. So depending on where you put your stop loss, which is again why I put multiple strategies basically on the same level with different stop loss distance. Some might hit stop loss here, others might have a stop loss at this level, so it pulls back a bit and then it pulls through. So some of the trades that were entered here might already have gotten stop loss moved very close to break even, so they got out at a tiny loss. Some might hit stop loss still, others are still open. So I'm trying to get a good average of entries and exits so that you spread the risk. Instead of having just one entry at every point in time, at every resistance or support level, I spread it and I make just basically smaller risk for every strategy.
Right.
So very simple put, instead of doing 0.1 lot on one breakout, I do, for example, 10 0.01 lots to average out the system.
I see. And would you take on additional positions when price, like it does on the right there, eventually does break out, or do you just rely on the positions you've already got open?
Well, it won't add more positions once you go up, but
Okay.
it will add positions if the level is tested multiple times. So, for example, this level, if you can see, basically this is the same level still.
Yeah.
So what it will do, I'm talking about one of my latest algorithms now. So it hit this level, it goes down, and when it goes down, it will say, okay, this is a resistance level, because we need to first pull back before we can see that it's a resistance level.
Yeah.
So it will start putting some pending orders. It hit it again, it goes down again. So it's tested 2 times now. It will add some more pending orders, even if there's already some trades triggered from this one. The idea is that if a level is tested multiple times, it's more likely to be broken.
And
So every level that is tested more and more, it's becoming less strong. So it's more likely to be broken. So the idea is, the more likely is to be broken, let's have more trades on that position.
Okay.
And when I did back test, because you would also think that maybe that would cause bigger losses. And of course, sometimes it happens that it's tested multiple times and then it retraces and you have a bit of a bigger loss. But if you manage your loss well, on average, these kind of situations end up with bigger profits. Because I did tests, let's have the same strategy, but with only one trade at the same level.
Mm.
But having multiple trades with retests of that level gave a much more stable performance over long term.
Right. Okay. I find that really interesting, because that's almost the opposite to what I had, in my mind for. So I've always considered with support and resistance levels, the more they're tested, if you like, and you don't get a breakout, the stronger that support and resistance becomes, because it's been tried and tested many times.
Yeah.
What you're saying is that,
I think it depends a bit on the time frame you're looking. If you look at monthly charts like this one, so of course, let's find the level. Well, here you can see another example actually. So this is the monthly chart, and you can see this level is tested by, this is the first, tested again, tested again, tested again. The thing is, when it breaks the level that is tested so many times, the pull through is usually much stronger.
right.
Because markets say, okay, this level is broken, and in this case, all the bears give up, all the bulls are adding maybe. So you can see the move after that a level is tested multiple times, the move is also stronger. So that is also an advantage when you have multiple trades open with trailing stop loss and everything. The move is stronger, so your breakout is stronger. Less chance of pullbacks once it actually breaks through. So, I mean, that's a bit the idea behind the adding of multiple levels.
Superb. Okay, no, that's really great. Thank you for sharing that, Wim. Now, on the platform, I can see that for your Darwin GKE, that it scores very highly on the close strategy investable attribute. So, you've spoken quite a lot there about how you would enter your trades, your breakout trades. You haven't spoken quite so much about how you would go about closing those, the rules for closing at a profit and so on.
Yeah.
But obviously, you score very highly at the investable attribute, so you're obviously doing something right. So maybe you could share a little bit about, how do you decide where to close for a profit in those strategies? And I think you've already mentioned in terms of closing at a loss in terms of the stop losses. But any information on that would be great.
Yeah. So I share again my screen. It's maybe easier to see. So once price breaks through, I already mentioned that I'd like to move the stop loss to break even quite fast, because false breakouts happen almost as much as real breakouts. So you have to be prepared that the breakout probably might reverse. So moving stop loss fast is option number one. But also you need to give the trade a bit of room to breathe. So it doesn't immediately go into trailing stop loss. So I have couple of things that I implement in the stop loss management, but also in the take profit management. And it basically follows the price. So first of all, there's the normal trailing stop loss, which, I mean, every algorithm or almost any strategy has, which trails the price at a certain distance. I like to make these distances also reliable on the actual price. So ATR, for example, to determine where the stop loss take profits levels are, especially with a currency like gold, because gold is now around 2,500. But a couple of years ago, it was around 1,000. So, I mean, obviously, the movements per day were a lot smaller a couple of years ago than today. So the stop loss and the take profit and everything needs to be adjusted to the actual price of the asset. So first of all, this normal trailing stop loss simply will trail the price if it goes up. I will do the same when the price goes down. So basically, for some of the strategies, I use a rather wide stop loss, but I use a trailing take profit, which means, let me try to find an example here. Can I move this? Yes. False breakouts. All right, this one, for example. So here the price tested resistance, but it went down. So let's say my initial take profit would be here, this line. I don't know, you can see that?
Yes, yes.
All right. So if price moves down and it looks like a fake out, stop loss might be, let's say, for example, here. So this initially looks like a very bad risk reward ratio. But what I would do is price moves down, take profit moves down as well. So basically, I'm not assuming, but I know that on average, price doesn't move down directly to stop loss. It usually goes in waves, just like it goes up in waves, it goes down in waves.
Yeah.
So I try to move take profit as well down. So what would happen here is, for example, take profit moves up to this point, price moves down, goes up, exits at a take profit, but at a loss.
Yes.
But a small loss instead of the full stop loss. So I have a lot of clients that buy my software that ask, why is your stop loss so far away? Why does your take profit move? Why is it negative? This is the reason, because you better get out at a negative, smaller take profit than at a full stop loss.
Sure.
So this is one of the things that I use. Another thing that I use, quickly this, is a stop loss based on support and resistance levels, basically. So the EA will also monitor when it goes up. Let me find this line. Let's say I have to try to find an example on this chart. Let's say this was the, I'm deleting this. Let's say we are using this breakout here. So initially, let's say stop loss would be here. Price moves up, stop loss moves as well, but it will also follow the recent support level for a buy trade. So basically to say, okay, this here is a support level. So that is quite a good level to know if price breaks this one, the trade is invalid for sure. Price moves up further. This here becomes a support level as well.
Okay.
So instead of just trailing, it will follow up on the support levels as price moves up.
So yeah, right. So you're using, so rather than just trailing it sort of constantly, you're trailing it up to a new,
basically on the market structure. So the higher lows on a uptrend, I will use as a support level for putting the stop loss.
Yeah, yeah.
If there's any example of this is, for example, a nice growing upward curve. So stop loss would move from here to here, to here, to here, to here, to here.
Got it. Okay.
So basically always in the higher lows of the uptrend.
Yeah, so as long as you continue to get higher highs and higher lows, the trade will remain in the market. And as soon as that regime is broken and you get a lower low, then
if the market structure breaks, the probability of the market turning around is bigger. So we don't want to stay in that trade, basically.
Yeah, got it. Okay, that's really interesting. Thank you for that. Okay. So I want now to talk maybe a little bit about your performance in Darwinia. And you've been competing in the gold tier now for over a year, and you've managed to get 5 allocations out of the last 9 months, which is really good. So congratulations on that.
Thank you.
Now, because the allocations in the gold tier last for 6 months each, it means that they're cumulative. And so I think just looking now, you've currently got about 420,000 euros allocated, which obviously, you know, any profit that you make on that, you get to keep a proportion of that, which is great. But over the years, I can see that you've received a total of over 1.5 million euros, which of course is down to good, consistent performance. So I'm interested, you know, could you tell us a little bit about what your experience has been with Darwinia? How have you found it as a motivational tool, as a tool for earning additional revenue and so on?
Yeah. Well, I don't quite remember how I got to open an account at Darwinex. It's 6 years ago. I think probably I was trying to find some ways to get funds allocated. And it's only until recently, I mean, like this year, that I started to put back more attention to it, because I had this account running. I run about 30 accounts on my VPSs. Darwinex is one of them. So I had this live account of Darwinex running, different strategies. Like you mentioned, there was some bigger drawdown last year, I think, on my Darwinex. It was basically one of the strategies was the scalper. It wasn't running so well anymore. So I'm always like evaluating and changing those strategies. And then this year, I started noticing that my recent strategies on Darwinex were doing quite well. And I noticed that I was in the Gold AAI, Darwinia Gold system. So I started to put more focus on it. And honestly, my experience with Darwinia has been very good. I mean, to me, it's an honest system. It allows me just to trade my own trading strategies without too much looking into what are the rules for trading and everything. So you just run your own systems like you want to. And apparently my systems are doing very well on Darwinia. What I also like about Darwinex, they have their risk engine, I think it's called.
Yeah.
Where they basically, I don't know exactly how it works because I've never looked into the real details, but I know it improves basically your own trading for the investor. So to keep the risk better managed. And I noticed that my account on Darwinex has a slightly better performance than when I just look at my own account in my FX book, for example. So I know Darwinex is doing something good with my trading strategies as well.
Yes, what the risk engine, you're right. You know, a lot of traders, myself included, would say that the performance on the Darwin is often better than the underlying trading strategy. And so, as you say, there's some good things going on there in terms of how the risk is managed. But also what the risk engine really is for is to standardize risk across different traders' strategies. And that really gives investors the ability to compare strategies using a like-for-like risk across all of them. So the returns are much more comparable in terms of when investors are deciding how to make up their Darwin portfolio. So it gives that sort of more of a level playing field.
Yeah.
But yeah, as you say, very often the performance of the Darwin is better than the underlying strategy. So it's a good point. Yeah.
Yeah. But I also noticed when I look at the other traders and the investors on Darwinex, when I compare, for example, with on MQL5, you can also provide signals that people can subscribe to and follow you. What I notice is the traders are more. It looks a lot more real, to be honest, which means you see reasonable returns, no 200% a year, but as a trader, anything above 20% a year is already very good. So the traders on Darwinex have this kind of how to say mindset as well. So they're professional traders. They look like real traders. They don't try to risk a lot and the potential to burn the account. All accounts that I saw competing are quite stable in growth. And the same goes for the investors. Looks like more like not the system hopping type of investor, but real investors that try to subscribe to a system and keep for that system for at least a couple of months. When you compare to some other offerings like on MQL5 or anything, the type of investors, they switch as soon as there's like a small drawdown period, they switch systems and everything. So it's a bit more professional experience with DarwinX as well for traders as for investors, as I noticed.
Okay, so you said something a moment ago, Wim, where you said, you know, on your you have around about, I think you said 30 different accounts that you trade, and I'd be interested to know, because obviously a lot of the traders that come to DarwinX eventually have tried prop firms in the past. Is that something that you've tried, or are you actively trading with prop firms now? Have you got any experience of that?
The only way I know about prop firms is from my clients, which buy my EAs. I noticed a big shift in the clients on MQL5. It used to be they bought systems for their own personal accounts, but since a year, maybe 2 years, I think 80-90% of people buying algorithms is trying to use them on prop firms. So my experience is basically through the experience of my clients. And from what I hear, it's not something that I would do personally. First and for all, prop firms, they want you to basically pay a lot of money to prove that you're a good trader on a demo account, which is, to me, it's a bit strange because first of all, I know that I can trade. And if they were really searching just for good traders, just let people trade and see how it goes. Like with DarwinX, you trade, you do well, you get fund allocation. Another thing is I hear a lot of bad stories as well about the prop firms regarding payouts not being done because of some silly rules, like you made too much profit in one day compared to the other days. You broke this rule, you broke that rule, and they always seem to find new rules to not pay out.
Yes.
Just to be clear, I have some clients that actually were paid out by prop firms as well. So I'm not making like a whole claim about all prop firms in general, but there's a lot of sketchy things going on, in my opinion, with the whole prop firm business.
Okay. All right. Thank you for sharing that. That was good. So, so moving on then, I can see, you know, if we look at your Darwin, it's obviously beginning to catch the eye of investors. It can sometimes take a little bit of time for Darwin's to do that, but you've seen a recent increase in the capital that it's attracted, and hopefully for you, this increase will, of course, continue. As traders increase the amount of investment they've managed to attract, it can often add a layer of additional pressure. Now, with you being an algo trader, I guess that's minimized to some extent because, you know, you're not making any trading decisions manually. But do you think that that will affect you in any way, that additional pressure? And do you have any tactics that you use to help alleviate that pressure that other people could sort of take hints from?
Well, I think there's a big difference between trading a $1 million account that you can see the $1 million in your account, or that you're trading your own account and you know somewhere there's $1 million following basically this trading. That's a difference, that's for sure. Because I used to have some funds that I traded, like I mentioned before, and they were bigger than $1 million. And then you have the stress indeed, also because there's more like a direct line of contact with clients. Another thing, like you mentioned, algorithmic trading is normally done because you want to keep the emotions out. But there's still emotion because you can see there's some losses the system is making. Should I intervene? Should I change something? So, like I said, I trade about 30 accounts running on VPS. What I do every day is I just go over them one by one to see if everything is running correctly. The same with the DarwinX account. And I make evaluations based on long-term performance of the systems. So I check every couple of weeks, couple of months to see all the different strategies that I'm running on my DarwinX. Is it in line with the historical results, with the backtest? Is something strange going on? And I make adjustments if necessary. So I think as long as I keep this mindset of just evaluating correctly, doing a good analysis of the systems, it's the best way to keep the emotions out. So at the moment, I don't really feel any pressure of the amount following my Darwinex, because I look at it very rationally from a trading strategy point of view.
Cool. Okay, that's really good to know. Thank you for that. Okay, so we've spoken quite a lot then now really about Darwinex and the different, if you like, capabilities of the platform and the offering. So if I had to ask you for just one thing that you would say is the most valuable about the Darwinex offering, whether that's something to do with the company or the products and services, what would you say that would be?
I think as a trader, for me, it's the feeling that I can just trade my own accounts, my own personal account, which I would trade anyway as a trader, just the way that I like to. And if I do well, I basically get rewarded with fund allocations. So to me, it's a very honest system. I have payouts, so I know it's also a reliable system. I mean, it's like the stories I told with the prop firms. You don't have to doubt if the effort that you put in is being wasted. So yeah, that's to me the most important thing.
Okay, that's great. Thank you. So as you know, I'm also an algo trader, and what I found from my own experience over the years is that you can be developing the next sort of, if you like, feature or piece of functionality for a strategy, and you really, in your heart, you believe this is going to make a huge difference, and then when you actually backtest it, you realize actually it doesn't, and sometimes it's a little bit, so it puts you on a bit of a downer because you really thought this was going to make a big difference, but then occasionally there's something that does indeed make a huge difference to your strategy. And in some cases, when it's sort of a generic piece of functionality, you can actually use that in multiple strategies as well, which of course is even better. So I wanted to ask you, have there been any of those moments for you where, there's been something that you've been working on that has fundamentally, improved your strategies? And could you give us some details about that?
Yeah, sure. So one of the things is that came in a dream. It was basically a very simple strategy.
Is this the same dream or a different dream?
This is the same dream. I only had one. Okay. I only had one good dream.
Okay.
But it taught me basically that a very simple strategy, for me, is what I feel most comfortable with. So I try to focus on the KISS principle, keep it simple. So I don't try to use almost non-indicators, because all the development I did with using indicators ended up with over-optimization. So I like to use very simple kind of strategies, price action based. What is the price doing at the moment? So that's one of the first things that made a big difference in my development. Another thing is I like to use the open prices only, 1 minute open price only, for example, in the calculations of everything in the EA. And the reason why is the difference between backtesting and live results is almost gone when you just use open prices. Because as an algorithmic trader, you know that you make something that looks perfect in backtest, you run it live, and for some reason, it doesn't have the same performance as the backtest. Yeah. And when I was using like every tick changes, every tick to calculate highs and lows and everything, there's a big difference because the ticks quality for backtesting is so different for every broker, for every setup that you use. So when you try to use things that are always the same for every broker, and open prices are usually the same for most brokers, or about proximus, very close. Yeah. I noticed that made a big difference between developing a system, testing it, and seeing that the live results match this back tests almost, not 100%, that's impossible, but like 90, 95%. And that improved my trading strategies a lot.
Right. Also, okay. So in terms of how you sort of, go about that, so you'd wait for a new M1 bar to appear, and at that point you'd use the open price of that and maybe previous bars as well, and then you wouldn't do any more processing until the next M1 bar.
Yeah.
Yeah. Okay.
You basically skip all the ticks in between, also for changing stop loss and everything. You try to keep it with prices that are universally the same at many brokers. If you look at the gold price, for example, it's quite the same, the daily candles, the H4 candles. But if you go to look at the ticks, there might be big differences. So you might be developing something on IC Markets or any other broker, and you get a how do you say, a big difference with when you run it on another broker.
Got it. Okay. All right.
Also, it helps a lot with how do you say, optimizations, because if you have to do optimizations using every tick, you have to do like hours and hours just to run one optimization. So it takes weeks, months before you get a system ready. And when you use only open prices, it can go much faster. You can have 1 hour optimization, and you already have some results you can work with.
No, that's great. Yeah, I use a similar technique myself, so that's good to hear you do too. It's okay. All right, so we're coming, I guess, to the end of the interview now, but I've got a couple more questions I want to ask. And the first one is, I like to ask this to every trader: what is it that you think distinguishes successful traders from others?
All right. Well, experience for sure, because you have to know the ups and downfalls, what is possible. But I think because I'm an algorithmic trader, and I see a lot of clients make mistakes when they use a system that is basically a good system. Because you know the rule, 90% of traders lose money. And even if they use the same system and a system is profitable, I see still 90% lose with that same system. And the reason is because, first of all, you have to know the system. You have to know how it will go. What's to be expected of drawdowns? What is to be expected of losses? Many people focus on what profits can it make, but they don't focus on what is a normal drawdown and what is a bad drawdown. When should I stop the system? When should I keep it running? Because I see a lot of people stopping a system in a normal drawdown. So as long as as long as the drawdown is normal within historical ranges, you shouldn't touch it. You can maybe find improvements, but you shouldn't touch it.
So you mean basically, even if someone's running the same algorithm that you're running yourself, you're saying that they're effectively beginning to interfere with the running of that and making decisions I'm going to turn it off or whatever.
What I see the most is basically they start using a system when it's making new highs, and they stop using the system when it's in a bit of drawdown. And then they wait, and then the system goes up again, and then they start again. So basically they're doing the opposite, because if you trust the system, you know the strategy, you know how much it can go down. Let's say the maximum drawdown is 30%. When you're at 20% drawdown, you know the probability of it going up now is actually bigger.
Higher.
So it's a really bad position to stop.
So they miss out on that. They miss out on that reversal.
Yeah. And it's usually because of fear, because automatic trading should be keep emotions out of it, but you can still see a lot of emotion being involved when to stop a system, when to start a system. And basically, you have to let it run. As long as it's doing normal things, you have to let it run. And then evaluate every couple of months. And for me, that's what I see, what most people fail in automatic trading to make any profits, is they use the system wrongly, basically. They stop and start it randomly at the wrong moments.
Got it. Okay. No, that's great. So, and then the final question is, what are your plans now for the future? So, for example, you mentioned a few things really. You've got all these different accounts. Do you feel that now you're starting to get benefit from DarwinX? Is that something you're going to concentrate more of your efforts on? Also, just in terms of your strategies, do you have anything in your development backlog that you think will be making a good difference in the future? So, where do you see yourself going from this point?
Well, I'm always evaluating my own system. So when I see something that is going bad compared to historical results, I will try to analyze, try to improve. I'm always on the lookout for a new system, still based on the same simple principles.
Still based on the dream.
Yeah, still based on the dream, basically. Yeah. But I'm also working at the moment at a breakout system for indices, so for the US 500 index, US 30 index. It's almost ready, so I see a lot of promise in that as well.
Okay.
I recently made some adjustments to one of the breakout systems for Forex pairs that I saw long term. It was stable, but last year it was a bit going beyond the normal drawdown. So I'd like to evaluate and improve that. nothing earth-shattering different that I will do the next few months or years, but just improving on what I already know and what I already do well, I think.
Great. Okay. And so finally, if anyone has any questions from anything you said today, are you okay for people to get in contact? And if so, how would they do that?
Yeah, sure. First of all, you can find me on mql5.com as one of the sellers. I think it's best you put the link because the name I'm going to pronounce is even more difficult than my last name. And I also have a website, which is quite basic, pointing as well to MQL5, but it is a website that I own. It's called forexeasolutions.com, just one word, where you can also find the contact form to contact me if you need.
Fantastic. All right. Well, let me just thank you for today. I found it really great. And, especially talking through the sort of techniques that you use in your strategies. I really like the idea of the trailing take profit. I only know, I think, one other trader that is using that particular kind of technique. So that was good to hear. And I've just really enjoyed it. I've really found it very insightful and thought-provoking. And there'll certainly be some things there that I'll take away and investigate myself. So thank you very much for your time, Wim.
Oh, it was very nice to hear. Thank you for your time, Martin.
Okay, bye-bye.
Bye-bye.